Hey everybody, Cameron and Van here from moneywareinvesting.com. We're going to start doing these format videos, just talk about the markets freestyle. Let us know what you think. So Van, I was talking to you about some TA and the market right now, how it kind of, you were showing me the standard deviations on, what was that technical pattern?
Mayor multiple bands is what we were looking at. Yeah.
Okay, cool. Could you pull that up and show me what you were looking at, how it's kind of trending right now?
Sure, bud. Do that if I can share my screen here. All right. Can you see that?
Yeah.
Okay. So what we're looking at here, obviously is Bitcoin on our daily chart here. And one of the things that I like to take a look at is the Mayer multiple bands. And this is from the, kind of derived from the Mayer multiple and just kind of graphically represented on the chart, utilizing kind of these deviations from the mean being the green line here in the middle over time. More can be learned about Mayer multiple on Wooble.com, Willy Woo's site. But essentially what it does is it creates, a mean, across this on a logarithmic chart. And what's considered to be anything like below, I think it's 1.45, or I don't know, my number might not be correct, but essentially the center line, which is the mean, as it's graphically represented. Anything below that is like kind of like oversold. And then, you have your 1, 2, and 3 standard deviations, essentially, from that. They're not exactly 1, 2, and 3. But if you look at this, over time from kind of the beginning, back here, when it first started printing, it's anytime that it's hit this upper, deviation, clearly it pulls back down. You have this mean reversion kind of thing going on. 2 standard deviations, pulls back down, hits mean. Then we get the lower side and so on and so forth. So, historically, it seems to be a pretty useful tool. And so right now we've actually, we've crossed below the mean, and that's when we saw this dump here. And then, we kind of had this little test here, this, below this first one, really just kind of gave 30,000. I think it was 20. That was right at 30, at least on Bitstamp. Little smooch here on that, and we may push back down to that, which would make sense because that falls in line here with the this area of support on the bottom here, right? Oh, all the other stuff that I have on this chart is coming up now. Let me kind of hide that real quick. These are previous analysis. Yeah, so, right around here, we have this area of support, roughly around there, maybe bring it up a little bit more. Why is my magnet's not turning off? Anyway, right around here. So, we need to find support there. I think, technically speaking, on Bitcoin, we would really like to see some support here. But, if we do break low, 18 to 20, I think, is our next level. 25 really would be a nice level of support as well. This isn't, there's no guarantee that we're going to find support here. I don't know how many people utilize.
It's pretty crazy that, I mean, what do we top out at? 64? And now we're going to go back down to, on just one drop here, we're going to go back down to, you're looking at 20. That's almost 3 times what it was at. Yeah.
So I don't necessarily think that we're going to go back down to 20. It's, I'm simply, I'm looking at areas of support, right? If we don't find support at this region here, if we do break low and we get another massive sell-off, the next push down to where people are likely putting their buys in is right here, like 24, 25, right at this little area where we had some accumulation over here. And then below that, 20 would be the next sensible level, just because that was our previous high, and that was where we, had some
Now,
accumulation as well.
now this is what would be an indication of a bear market for you? Because I know a lot of people are still saying that we're in a bull market, but what would be that kind of make or break point?
So, I mean, what is it? I think anything above 20% of a pullback is technically considered to be a bear market. So I guess we could say that we're in a bear market to some extent. This is, I think we're past just a correction or a pullback. But how long this move will last, I guess over time, I don't know, right? Like nobody knows how far this will pull back. And we were discussing this earlier, talking about Gensler's comments recently, when he had just had the meeting with the whatever commission or committee that was, and one of the things that he was focusing in on, and that will likely be focused in on for crypto specifically, is regulating exchanges, and creating like investors protections. And one of the things that he spoke on was how on these exchanges, front running is an issue, right? Like there's the ability for people to front run kind of these trades, so the information comes into the exchange, and then kind of the big dogs can trade on that, as these things are showed. And there's no policies or regulations or anything around whether or not that can or cannot be done.
And isn't that what we saw with Robinhood, with their whole clearinghouse, and they were seeing things come in, and then they were having the hedge funds front run other retail buyers' orders and making money on those commissions?
I can't speak smartly on that. I'm not sure if that's what it was. If it was being done, I'm fairly certain that's illegal, specifically for them. But even if that is what was happening, it's likely, for sure. I think Robinhood, there's well, I don't know, maybe, but specifically to crypto, anybody in it knows that it's grossly
Right.
unregulated, right? It's kind of still the Wild West. And I think there's kind of a mixed pot as far as like regulatory bodies, whether in the US or globally, taking a look at these things, and looking at crypto, and how to even how to categorize it, I think needs to be taken on, because I think currently it's considered to be like commodity, right? But they trade like currencies or securities, but they're not considered to be, right? And there's so many different projects out there, and so many different things where Bitcoin certainly could stay a commodity, but some of these other ones may not be. And so and one of the other things that he was saying is that they have maybe 17% of their funding is put into technology. And so they're kind of behind the curve as far as what they're able to do with something that is very tech heavy, right?
And they were saying
that.
And they were saying that a lot of companies spend that in a month what they spend in a year.
He said some companies spend it in 2 weeks what they spend in a year on tech.
It's crazy that the regulatory body that oversees all of this stuff is spending such a little amount of money actually doing what they should be doing, and that we aren't putting money into that.
Yeah.
I mean, the overall markets, he was saying the overall markets are $100 trillion that the SEC oversees. And the total market valuation of all the stock market right now is 50 trillion.
Yeah.
Oh, and there's a long way to go if you look at Bitcoin and cryptocurrency in terms of even taking a little bit of that share, because I think at all-time high we hit about 2.5.
Yeah. And I mean, at the end of the day, like I kind of touch on this as well, when I talk about this, kind of some of our other streams and stuff, even if it does come down here to 20, that's a major hit, clearly, for anybody
Right.
who bought up here. You're talking about a 70% drop from top. So that hurts, but
And that'll
anybody
leave
who,
a lasting effect on their investing in cryptocurrency.
yeah, well, it did, clearly from 2017, 2018, that was 84% drop to low, right? And that hurt a lot of people. That really kind of was a kick in the nuts, for sure. But I think the volume and the amount traded at the time was, I mean, it was probably on the radar for the SEC and stuff like that. But certainly, companies like Tesla, MicroStrategies, all this weren't so heavily involved in this at the time. And so, just mostly just retail getting slapped around. And realistically, that's what the SEC is there for, is essentially to protect.
And they want to do it in like in a good way too. What he said was, I mean, he has a crypto background, but what he said was he just wants investor protection. He doesn't want to take down crypto, which they had said in the past, crypto is the enemy and it's used for money laundering and this and that. But, they didn't talk about how the US dollar is used for stuff like that or anything. But I think that they're starting to hire people and more understand how it's going to be so needed in our society and our world, and creating well, I mean, let's be honest, if the United States tried to ban it like China did, people would just start finding other ways to trade it. So they know that they can't take it down. So now they're gonna hopefully do this in a way that doesn't hurt investors too much and make people want to invest in it. But I think that's kind of what a lot of people are waiting for, and especially big money.
Yeah, absolutely. And the SEC, again, one of their purpose is to protect investors. And how he put it was protect investors, facilitate capital formation, right? And then he said in the middle of that is to create fair and orderly and efficient markets, right? And ensuring the policies that that there's no corruption and manipulation in these markets as best you can. So clearly you want to protect investors, but you also want to make sure that kind of the big dogs can play and utilize these these markets as well, and then fairly, right? So I don't think there doesn't seem to be, at least looking at it and watching it and kind of following this, like a really negative view on this, like a full-on ban.
No,
that I can tell.
They know they'd be dead in the water if they did that.
Yeah, and especially when you have the Fed considering now
Fed coin
studying these the what do you call it, central bank CBDCs, central bank digital currencies, kind of across the globe. The Fed is at least
I mean,
taking steps to look at this.
They're giving people digital wallets in their bank accounts now. I mean, I logged into my bank and they said, "Do you want, you want to set up your digital wallet and this and that?" And so they're really moving in a good direction. Yeah.
Who do you bank with?
I saw it on Wells Fargo.
Interesting. Yeah, I know the no, okay, it escapes me, but the basically not. Okay, well, never mind. Yes, it's happening, and from a federal standpoint, they've given some banks the ability to hold custody of at least of stable coins. I know the OCC, I think.
Really curious to see. I mean, how they use XRP, how the XRP case goes, but how these banking systems are already starting to use XRP for transactions across networks.
Yeah,
we could touch on the a little bit what I was talking about the use cases for cryptocurrencies in the future, and really how they're going to change. They can change the world as long as people help the adoption happen quicker rather than later. With things like, Airbnb and being able to rent out a place, and you don't have to use a company like Airbnb. You can just do it on the blockchain directly with your customer, and you don't have to go through an intermediary to facilitate that kind of transaction anymore. Or you can go on a social media platform, and it doesn't have to be owned by Facebook. It's just owned by AI or an application. Just all those things, removing the middleman and just being able to peer-to-peer transactions with nobody in between is really going to make things, I think, a lot smoother in society, and make our ability to move further as a society in much quicker than we can now. Because when you think about having to go out and buy a house or something, you have to drive to the bank, and then you have to wire the money, and then you have to go to the title agency, and you have to sign the paperwork, and it's like all that stuff, it just takes so much time. And it's just like, I want to buy your house, you want to sell it to me, I have the money, you have that money, we put our protections in place, but this can all be so much quicker, instead of oh, it's going to take a month to close, it's going to take this, it's going to take that, and then we don't have to worry about that stuff anymore. And I think really when society started moving forward is when we had these systems that started to kind of automate themselves, so it would give us time to work on things that would push us forward. But if people want to change, but when we started cultivating food, and then we had we procured one person to do all the food for everybody, and you have all these factories now and stuff. I'm not saying they're healthiest, but you can get food on a whim. You don't have to worry about farming and all that kind of stuff. You can focus on building something and creating a better future, and moving into that digital age over industrial.
So one of the I guess the ways to look at this is whether or not there will be kind of a mass a separation between the technology and like cryptocurrencies themselves, like the IPOs and that kind of stuff, because you can utilize the blockchain and integrate it into these different firms and in their systems, and just use the blockchain without needing the cryptocurrency necessarily, that a lot of these the cryptos
use like a stable coin instead of a coin.
You don't need a coin at all, right? Like you can just use a blockchain in your system, right? You integrate that into the system in some way, and put whatever information you want onto the blockchain without even creating a cryptocurrency, right? And so the use of the technology itself can be separated from cryptocurrencies and that and so if that is the way that it goes, if you're looking at what is it, Redfin or Zillow, or I don't know, one of these brokerages, or the I guess whatever the real estate apps, if they create their own system that's built on the blockchain and just integrate it with what they already have, versus using some sort of Ethereum or the contracts from some crypto platform that is coming up with it, will there be a separation there, right? Like, do they need these projects that are all on the blockchain and have some sort of cryptocurrency associated with it, or can they just utilize the blockchain for themselves and create these kind of the immutable the ledger and the contracts and everything else that comes with it? And so it'll be interesting to see that, because already that's happening, right? I mean, IBM is finding ways to utilize the blockchain and all this. So this push for crypto and what it means and what it could be, I don't know, it'll be interesting to see how it plays out long term, because it's clearly, the technology has, a use and is interesting and will be used, but how that goes long term for crypto, cryptocurrencies and these different projects. Now, we have different, I guess, sectors within crypto. You could consider it with NFTs and DeFi and from blockchain, or not blockchain, but like Bitcoin as being like, your level one kind of first, iteration. It'll be interesting to see, how retail and institutional investors will see this, long term. But I think as far as, Bitcoin goes specifically, I don't think it's going anywhere.
No, I mean, when you think about Bitcoin as a hedge against inflation, it's, when people are looking for some place to put their money in the long term, you think about inflation and hyperinflation and things that happened with, let's say Venezuela, or there's another African country, and they were trying to find, where am I going to put my money? And that's one of the great things about Bitcoin is, it's relatively the same value here as it is in any other part of the world. But the problem is the volatility with it. But if you look at it over a long enough scale, it always outperforms every other asset.
Yeah. I'm curious to see how the distribution of Bitcoin will move, right? Because like, I forget who it was. I just saw an article pop up, kind of, any bazillions of these notifications I get. But somebody was looking to invest it's like $1.5 billion into Bitcoin. Some, mega wealthy dude. I don't even know who it was. But the first thing that came to my mind was, right, it's like, well, as these guys kind of come into the game and they're like, well, I want, my chunk of Bitcoin, and they start buying this up. Being is that it is a finite, there's only a finite amount of it, over time, will these people just hold on to it and just, own X amount of, percentage of Bitcoin, or will it be distributed, right? Like, it needs to be distributed to, the masses if it really needs, if it's going to work, right? Because
Right.
in order for it to really be like peer to peer.
Well, I mean, but I think Bitcoin like they say, it's digital gold. It's kind of a preservation of value. I don't think it was ever, I mean, it was the original. So obviously it had flaws. Like everything that's the original has flaws. So it's like Bitcoin's the first. It's got a great story behind it. People really like it. Its distribution, from what I know, is fairly good. I don't know how much Satoshi still has in his wallet, or that'll ever come out. That'll be very interesting to see. But
Yeah.
I think that there's so many other coins that are better for mass adoption, like and it's definitely not, Dogecoin, but it might be Dogecoin. Who knows? It all depends on who, the people want to be that currency. I feel like, and I feel like if anybody's
Sure.
going to push it, it's going to be, one of the richest guys in the world, Elon, if he develops it. And then people go to the grocery store and they're like, oh yeah, we take Dogecoin. And it's like, you start to move into that transition, and who knows, what could happen with that. But
Yeah. Should
but
stop.
it's definitely not Bitcoin, because it's just not sustainable to see like, oh yeah, how much is that? Oh, it's 0.00000234 sats. Like, I can't do that math.
Sure. And I mean, again, whether Bitcoin becomes like the currency for use, or a commodity, or you created a digital currency pegged against Bitcoin somehow. I don't know. How this will play out in the future.
Maybe there'll
But
be multiple. Maybe there won't just be one.
sure, but again, I consider it to be more like a commodity. Like digital gold, right?
Right.
Where, you can hold it as a store of value, and you can trade it for, in the way that you trade it now, other currency. So it has like all these different properties, as well as, having the technology. There's so much that you can argue for and against this.
Yeah.
Either way, and nobody's going to know until,
It comes
we're
down to
10
adoption.
years, 10 years time, 5 years time, whatever it is. I mean,
But the fact is, if you look at the amount of long-term Bitcoin holders over a time period, which Kathy Woods had a good breakdown on all of it, there's always going to be, people that buy it, and then there's going to be people that really believe in it as something, as a hedge against the collapse of America or the collapse of societies or whatever. And you have, let's say 1 out of every 10 people that invest in Bitcoin end up holding that long term because they have the belief that, like, this is digital gold and like this is going to gain value. It's the first thing, one of the first things that's ever existed that it's got a set amount and no more will ever be produced. I mean, it's like with gold, it's like, and diamonds and jewelry, you just have companies that hoard that stuff and then they release it on the market as they please, so they are essentially controlled. But for Bitcoin, it's like, how much exists, how much is ever going to exist, and the more people that hold it, the higher the value is going to go, because you're not going to keep printing zeros on a computer screen at the treasury and saying like, oh, we just printed $6 trillion more today, okay guys, and we're going to spend it. And it's like, you have a failing system that's halfway downhill and you're trying to climb back up, and it's the best we have. But now with crypto, I think that we can try to find something better.
Yeah. And I mean, the thing too is, when we have, whether it was or was not, the China ban this week that kind of continued to push us lower, or what was it? Somebody kicked out a power cord or whatever it was that had, that was due to, kind of one of the last dumps that we had. That kind of movement and volatility is due to the fact that, there's a vast majority of this in one place or another. So that's what I was talking about, like the distribution of this. If there are a mass amount, if some group or person or whatever controls billions of dollars worth of Bitcoin, they have the ability to really manipulate the market at their whim, right? If they want to. But as it's distributed, to the masses, and more people have control over portions of this, the ability to manipulate that, and the volatility that will be involved will kind of like level out over time, which it does anyways as the volume increases, right? But with these other ones, clearly we need some oversight and some protections, right? The fact of the matter
especially
is,
on exchanges,
clear, yeah. But we saw this in 2017 going into 2018 as well, where everybody and their brother was jumping in, talking about their new coin, and they've got this, and when there's all this hype around it, and the ignorant, those who aren't keenly aware, or in this, and they're just kind of coming into the market, you don't know, right? You don't know what's good or what the next Doge is or whatever. And then now with the advent of things like TikTok and YouTube and all this other stuff, there's so many opinions, including ours right now, to draw from, if when you're learning and whatnot. And if you're not approaching this with some degree of intellectual honesty and really challenging yourself and just kind of moving toward your what you want to believe and what you want to hear, and who's your favorite face promoting this, that, or the other, not really reading the white papers or looking into what the projects are, people are going to get burned hard again. And we saw this in 2017 where, you know, there's so many just junk projects that may have been great ideas, you know, even that just failed. And, you know, a lot of people, you know, lost money. I did for sure. When I first got into this, you know, I was excited and moved into it. And, you know, but I think the difference now from then, is that, you know, we're in a place now where there's regulatory eyes on this. It's starting to really consider, you know, to be considered as a
moving
threat.
forward. It's moving forward. It's not
Sure. Right.
It's not going under. It's not moving backwards. There's more people talking about it, and there's more people that are worried about it in a malicious way, and more people that are worried about it in a progressive way. And it's like, do you think something like that people are really looking at is just going to end up dying? It's going to go somewhere, and who knows? I mean, I'm really excited to see what happens. You know, I don't know if we're there yet.
No, definitely not.
Vitalik doesn't think so yet, but
yeah, no. And when you have, you know, the malicious side of this, and the, you know, how it's used for money laundering, and the need for, you know, AML policies, and just how anti-money laundering is considered with, you know, through or state agencies or FinCEN or whatever, you know, these things need to happen in order to, you know, well, clearly we don't want bad guys to just be utilizing this and get full anonymity. Like, I'm not, you know, pro you know, human trafficking,
right,
or drug dealing, you know, like these are things that need to be squashed. And, you know, there's certainly challenges for law enforcement agencies to do this. But the fact of the matter is, now versus 2017, you know, I'm sure that was on their radar. We, you know, agencies are starting to, you know, put funding toward, you know, looking into this, including the IRS, which is, you know, I'm sure not exciting for a lot of people in crypto, but the you know, they're going to want their piece of the pie too. And if it is considered, you know, to be a commodity, and how it's traded, or currency, or however equity, you know, then, you know, one of the things was anything over $10,000 needs to be
exchange to exchange.
That's something that already exists, right? These are policies that exist already in, you know, equity. So it's like, so, right, like, I mean, you know, you're doing it anyway. If you're coming into crypto with the intention of skirting taxes and everything else, you're going to be up, you know, in for a rude awakening as these agencies get, you know, wiser to this, especially with Bitcoin. There's some anonymity to it, but certainly, you know, it's not, you know, it's not completely anonymous. You can figure out who's got what if you really try, and you know, with the unlimited resources that they have, like, it's, you know, it's only a matter of time, like if you're just trying to skirt taxes and stuff,
right?
Anyway.
And to touch on that too, what I see a lot of people talking about now, and even some, like, you know, accountants or whatever, they're saying that cryptocurrency is taxed as property right now. It's not taxed as like a stock. So there's no wash trading rule. So it's like they're telling everybody, you know, if you bought Bitcoin at 60 and you're down to 30 now, he's like, sell right away and then buy right back in. And, you know, you won't have to pay taxes or this or that. And then he's telling people, you know, buy and sell, buy and sell, buy and sell. And honestly, I think a regulatory body is going to come in and say, you can't keep doing that. You can't keep wash trading, because that's just not how it works. So I think that they're going to change the way, maybe this year or next year, that cryptocurrency is taxed. But I think people are going to be up in for a rude awakening if they believe that they can keep doing stuff like that.
Yeah. And all of that needs to happen, I think, personally,
for us to move forward.
Yeah, absolutely. And, you know, something else is the, you know, well, I just lost that thought. There that goes. Exactly. Yeah. Well, anyway, yeah, it's the taxing of this is going to happen. And if you are, if it's being used, if you're running it through tumblers to get it from point A to point B, anyways, right? Because you don't want anybody to know. I mean, that's, to me,
It'd
it's,
be, yeah, I mean,
you're looking for trouble anyway, right?
yeah, I mean, but if it'd be great if they, say they taxed crypto at I mean, I don't know if they would do it, but at a lower rate than stocks, and that would give people, you know, incentive to trade crypto over stocks. But maybe
Yeah.
because it's more volatile and it's not as regulated and they can't fully regulate it. So, but I
Oh,
don't
that's
know.
what I was going to say. That's what I was going to say is that, when you have people on these social media platforms, clearly, again, this, I don't think it's stopped, but it's certainly picked back up since, 2017, um, doing these pump and dump schemes. Uh, but what's baffling to me is now that there's like, tutorials on how to create and execute a pump and dump scheme, right? There, I think it's interesting in the way, I don't think that some of the people who are, especially like on TikTok, that some of the people who are doing this actually really understand the legal implications that could befall them as they continue forward with this, especially if something happens and somebody's on the wrong end of that, and they want to make a case with one of these, like the SEC or some other regulatory body, saying like, hey, look, I've got videos of this guy talking about how to do this. I got caught in this. I lost $50,000,
Right.
$100,000, whatever, in this, and clearly it was meant to be a pump and dump scheme. There's going to be more actions taken on those people, and that may be a learning opportunity for some of these people, because on these platforms everybody's an expert, right?
Yeah.
Everybody, you got some 18-year-old that's fresh out of high school who
Just
is
wants
into
views.
crypto and doing it for the likes, and then realizes that there's opportunity to make money in this way, and shilling this, that, or the other, and then you've got the maybe boomer who saw this on some video, or I don't know, whatever situation you want to do. All I know is that it has the potential to hurt a lot of people. However, this
Yeah.
said, I think there's a lot to be said for this interest, right? The interest in this, and these kind of what a pump and dump is, or like the interest in the market, whether it's Robinhood or crypto, utilizing Webull, or just that kind of interest. I think it's going to create like a financial savvy generation,
Mhm.
whereas
For sure.
previous generations, even like my own, maybe not so much, right? Like it was
Right.
just like, you do your job, you work, you do this, whatever. The advances in technology for the people, and moving forward as they become more advanced
Well,
financially,
I think
it's
that
very
we
interesting.
have to though, because I mean, millennials only hold 9% of the distributed wealth of the country. Boomers hold like 30%, and then the generation before them hold like 20 something percent. And then so we have to find that way to build that wealth. And I think that financial systems and learning this stuff is really like, they get a little taste of it. I got a Dogecoin went up 50%, I made some money, and now I'm really hooked on it. And I think it'll make our country a better place, especially because they learn about finance and how to use money. Maybe not in the beginning, but being able to learn and utilize YouTube videos like this, or whoever, it really will drive a generation. And that's, I mean, I got started in penny stocks and I lost a lot of money, but I got in because I was like, I want to make money quick. So I got sucked into the Ponzi scheme of somebody trying to sell me something. And I said, I went away from it for a little bit. And then I came back and I was like, I want to learn this the right way. So I started figuring out how it worked, what I do, what I don't do, and then eventually became successful at it. And I think that, maybe those people that are pumping at the 18-year-olds on TikTok and stuff, they don't have malicious intent, but then they, learn over time, like this isn't the best thing to do. And then maybe they do learn how to trade and properly, most of them, hopefully. But to touch on what you said about the scamming, it was getting it's getting pretty bad because they take the live streams from other people. Like, for instance, Elon Musk was sitting at a table interviewing about a year ago on a panel. I think it was 5 or 6 people talking about Tesla cars and stuff. And they said, they had a live video. It said live on YouTube, and it had that panel video in the upper left-hand corner. And it said Elon Musk is live right now. So they named the channel like Elon Musk or whatever. And they show up front because they're live. So on the side of that, it said like, Elon is giving away this many Dogecoins. Go to this website and find out how. And it's probably one of those stupid, like, send me 1,000 Doge and I'll send you 5,000 Doge back as a promotion. And how many people are going to get caught in that?
Yeah.
They make millions and millions of dollars doing that stuff. And I don't know how they sleep at night, but it's getting really, like, if you're not in the know and you're not technologically savvy, like, you're gonna get burned.
Oh, what blows my mind is the Bitcoin for Bitcoin schemes that you see pop up all the time in social media. We see it in Twitter, Facebook groups, stuff like that. Send in, point whatever a Bitcoin, and we'll send you back 0.15 Bitcoin. Right? It's like, well, who in the heck would even consider that? But people, you see it in the news. People getting smashed with this. They send it in and then it's gone. Right? They send in, thinking that they're just somehow that I don't know of anything ever where you just send in money and then they just multiply it and send it back to you. Like but people are falling for this kind of crap, and it's getting more sophisticated too, right? I mean, you had back in 2017, 2018, you would see these mining scams where you throw in X amount into like a whatever.
I mean, look at BitConnect.
Right. Yeah. In order to mine, and then but see, that's just it. Right now they're taking enforcement action on some of the people for BitConnect. I just saw as well.
Really?
Right. So the criminals are just as savvy as the tech. I mean, anywhere there's ability for,
there's always going to be it, but
yeah, they're dishonest.
The crackdown will help.
But yeah, and that's where that's where we need to have these regulations and these agencies and enforcement agencies. Now, I know that's kind of like against the spirit of crypto and decentralization and all this other stuff, but at the end of the day, there's just people that are going to get hurt by this, that are just trying to trade this, trying to make a quick buck. And then there's people that see those people and take full advantage of them, and create these pump and dumps and stuff like that. And if there's not somebody out there that's like, no, then it's just gonna run rampant, and that's not good. But it'll be interesting to see for sure how Gensler's tenure, and even
or the XRP case.
Yeah, certainly very interested in that.
That'll be big for this space.
Yeah,
to see how they handle that.
Yeah, I think it's going to have wide-reaching implications, for sure, at least in the U.S. What comes of that. And it's so interesting to me to see like these two bodies kind of collide. XRP army is fanatical,
yeah,
to a point of irritation, I think, especially the past few years, where it's just blind. XRP is gonna rule the world, like there's just and they're I think they're protesting right now, even so that kind of support is interesting to see, in the as it moves forward with like the SEC, in a way where I don't think necessarily you would see that for like AT&T,
yeah,
right? Like people really like,
AT&T stock. Well, they did it with they did it with GameStop and AMC, and I mean those are
yeah,
childhood favorites, but maybe not like CVS Pharmacy. I love CVS.
right, right.
CVS Army. Like
Yeah,
that's
don't
not
don't
gonna happen.
yeah, don't you regulate CVS. I don't care what they, um I don't know. It's a really, I think it's a cool time to be in this space.
Yeah.
I think a lot of traditional finance people find it wholly irritating. I feel like there's a lot of people in finance who enjoy the very predictable kind of structure in some sense of what to expect. The way things are, the way things have been, how to model and everything else. But it is also exciting, I think. Finance and others may not find it exciting. I know a lot of people who do not. Most
Not in the
people
beginning. I feel
most
like
people I talk to, making
right.
money is great,
But
but like
yeah.
the nuts and
But I feel
bolts, not
like
so much.
if you don't like you appreciate it and you like get enthralled in it, the more you understand it. Because I remember when I was younger, it was scary, it was like finance, like, oh, what is that? It's like it's a lot to learn, but once you start learning it and you sign up for a course on moneywar.com, moneywarinvesting.com, then you really start to appreciate it and you start to really get engaged in the community.
Yeah. Yeah. And whatever it is, stocks or crypto or anything like that, there's just so much, there's so much to it. There is so much
Yeah, there
to
is. But
all
it's
of
it's
it.
an ever learning journey. It's like you're
Yeah.
never done. It's kind of like if you're into
Yeah.
cars, like you're never done building your car. There's always something that you're going to be doing to it or changing. It's the same thing with finance.
Yeah. Yeah. I'm just really excited, I think, about the interest in, I say, younger people. I'm not that old, I don't think, but I know that when I was younger and in my 20s, it just wasn't there for me
No.
for this kind of stuff.
Uh-oh.
And there's a lot more people in that age range that have some interest in this in some way, shape, or form. Um, and in the tech, and specifically in technology, but also just being, involved in something like, um, trying to get these short squeezes and even understanding what that means at a base level, at that age, I think is awesome, right? Because
Yeah.
who knows what this will spark as far as like, the future of you know education and opportunity, for younger people, but the generations coming up and whatnot, and what that means for the hedge funds and all these people that traditionally have just been able to kind of, it's been business as usual.
Right.
um and what kind of battles there will be in the
Yeah.
future in finance, between these entities, and I don't know, I think it's cool,
It's hard because it's like that the people that control the money, the separation, the separation gets bigger every day. The more money you print, the more separated our society gets. And not to jump a little off topic, but when you go to societies that like money separation isn't that vast, you find that those people are more willing to befriend each other and build communities and be closer and not segregate each other based on their income level or how they dress or anything like that. Because they're all see each other as equal people, which I think we should. But when you live in a society like ours, where you have, really rich people and you have really poor people, then the poor people hate the rich people and think that they're like the worst people on the planet. And, a lot of the rich people are the nicest people on the planet. And it's just the views of each other are just so thrown off because of money. It's like, oh, that guy has a Lexus, so he must be cool. Or that guy's driving a 93 Chrysler van. And it's like, he must suck and be like dumb. And it's like, we're all like, can be, you know, friends and stuff. It's just, you have to meet in the middle. but they
Yeah,
don't have that. They don't have, I mean, they don't have that separation. And like, if you go to Costa Rica, like everybody's like a big family. They don't like look down on each other or anything.
Yeah. And, I mean, I'm sure there's always going to be, your have and have nots in
Yeah.
some way, shape, or form. And, there was that podcast with Lex Friedman and, what's his name? Robert Breedlove, where they were talking about, what
Oh.
property is and
Hell of a last name.
Breedlove. Yeah. The Friedman Breedlove podcast. Yeah. That was a good one though. But yeah, I mean, who's to say any way, shape, or form? This is why I default to kind of technical analysis, right?
Yeah.
There's so many ways you can interpret
fundamentals
and the way things are going to be and how you speculate fundamentally.
You kind of alleviate that headache.
Yeah. With technical, it's just, for me, it's it's the numbers, right? Like being able to, mitigate your risk and really identify what your risk is and how that works, with your, growth or of your portfolio. So, whichever way it goes, you can really kind of lock down, what your potential losses and gains will be versus, just, say value investing and being wrong, right? Like,
right.
Doing the fundamentals and looking at a company and really being sure about something and then getting caught up in your own bias and
right.
Finding, that you really like this and you're going to throw money in it. And when it continues to go down, you just refuse to believe, whatever. This is why I lean more toward technicals. And, if I take the loss, I know the risk involved in the loss and where that was. It's not for everybody. I'm not bashing anybody who doesn't use TA or whatever. I mean, we all trade and invest in our different ways. But for me, it's just, there's just so many ways to, speculate on
right.
things.
It's infinite.
Yeah.